As the home buying process remains a more difficult one for many Americans, they're increasingly turning away from banks for mortgages, and they're turning to an unusual source, credit unions. CNBC's Jane Wells joins us from Los Angeles with a look at why this might be a positive for the economy. And Jane, I guess the question here is, what's the big advantage for the home buyer turning to a credit union?
Well, maybe they can actually get a loan, and also they'll work harder to help you work through the loan, Bob, because the credit union is owned by all the members, so if you default on your mortgage, it's the guy sitting in the next cubicle who ends up having to foot the bill. But, you know, it's been so long since I've had anything positive to say about mortgage lending in California. For those who see California as a leading indicator, listen up to these numbers. California credit unions report that they made more first mortgages, both purchases and refis, in the second quarter than they have made in 5 years, more than 12,500 loans. That's a 20% increase from the first quarter. $7.3 billion in loans made by Golden State credit unions in Q2. That is nearly 10% of all the credit union loans made in the nation. And when it comes to modifying mortgages, California credit unions accounted for a third of that businesses, modifying nearly $1 billion worth of troubled loans.
It seems to me that while we've fallen further than the rest of the nation, we entered this recession early, and I think we're going to pull out of it early. I think we'll see the recovery be more robust in California.
Now, deposits are up over 4%. Net worth is up over 3%. The capital ratio of California credit unions is now over 9%. Even small business loans are up slightly. Here's what we don't know. We don't know how much of this new business is cannibalizing from banks or people turning away from banks, and how much of it may be actually overall improvement in lending across the board here out west. But, Bob, I just want to throw one more number out to you about credit unions. Year to date, or through June, I should say, nationally, credit unions have made more than 300,000 mortgages and more than $140 billion in loans. That's real money. Back to you.
You know, Jane, this is very interesting because we used to have the shadow banking system where people, particularly commercial operations, got loans outside of traditional banks. Now we're having a little bit of a shadow mortgage system. Should mortgage companies, should banks be worried about this trend?
I don't know. You know, there's also one advantage, I believe, for credit unions. I believe that they have a tax advantage. They don't have to pay the same sort of state and federal taxes that banks have to. So it's just been a boom time for them. Of course, then they are taking on more risk. If, in fact, they are making more loans than banks generally, they are taking on more risk, but maybe it's a sign that the risk is worth it and the economy's improving.
All right, Jane, thanks very much. Always a pleasure to see you. The SEC's